In today's video, we are talking about the TSP. Now, there are a handful of reasons why people want to leave the TSP, and we're going to go over them. And there's also a handful of reasons why people want to stay in the TSP. We're going to go over those as well. And then you can decide what works best for you. Coming up next. Hey, my name is Mel Stubbs. I'm here on behalf of Retirement Benefits Institute, talking to federal employees about their retirement system and planning for that. If you like this information, please like and subscribe so that we can get this information to more and more people. So today we're talking about the TSP and what are the reasons you should stay, what are the reasons you should leave. That's what we're going to go over. So coming up first, a reason to stay is the G Fund. Now, what's so special about the G Fund? It is guaranteed not to lose, and it is 100% liquid for somebody over the age of 59 and a half or someone that's retired. And so there are some other options out there that are similar to the G Fund, but what makes it good is that it's guaranteed it can't lose and it's 100% liquid. Now the drawback is it doesn't earn that much. The 15-year average is in the 2% ballpark, but if you look last year in 2020, it earned 0.97%. So that's not so good. There are other options out there that also are guaranteed not to lose. The problem is they're not as liquid. They should earn more, but they're not as liquid. If that's not a problem, that might be a good option. There are some that are 100% liquid, but sometimes they aren't guaranteed not to lose. Depending on what you want, there's something you can find there, but the benefits of it, guaranteed not to lose, and it is 100% liquid if you're over the age of 59 and a half or retired. A second reason you might want to stay is penalty-free distributions under the age of 59 and a half. So let's say you're a regular FERS employee and you retired at 58. You've got a year and a half until you're 59 and a half. You can touch your money from the TSP with no 10% penalty. But if you roll the entire balance out to an IRA, in an IRA, you got to wait until 59 and a half to touch your money, or there will be a penalty. And so this doesn't mean don't roll your money out. It means you need to leave some money back. So some people will move a portion of their money out, but they leave a portion so that it can be liquid, they can get to it, and it's penalty free. Also, if you're a special provisions employee, you can retire at age 50. So that's going to be like a 9.5-year window that you're going to want to leave some money in the TSP that you can access without a penalty. Now, this third reason to stay might be a stretch because it probably doesn't apply to a lot of people. But when you hit 72 and a half, you have to take required minimum distributions. From an IRA, you have to take it. If you're retired, you have to take it from TSP. However, if you're still working at 72 years old, you don't have to take an RMD from TSP while you're still working. It's not a huge benefit, but it is something that makes the TSP different. Now, if you've retired, you still have to take one. So the only difference here, the key thing here is you're still working at 72, then you don't have to take it. Another reason you might want to stay, if you are self-advised and you just don't need any help. You don't need somebody to help plan with you, to help go through scenarios with you, to give you advice, to help you pick out what investments. If you're controlling everything, you're self-advised, you don't need any help, it might be a reason to stay with the TSP. Now, this isn't a reason people stay, but I do think it's why people stay, and it's familiarity. You're just used to the TSP. You've been there so long, you understand it now, you know how to work it, and so people just stay. And without a convincing reason to leave, then they just stay. So next, let's go over some of the convincing reasons why you might want to leave. The first reason you might want to leave is for diversification of investments. The TSP is very limited with your choices. You have G and F on the conservative end, C, S, and I on the aggressive end. Now you have a whole bunch of L funds now, but they're still made up of those 5 funds. So you really don't have a whole lot of options. If you want the stock market, you got 3 options. If you want safety, you got 2 options. That's it. In an IRA, there are a lot more options. There are small cap, because the S fund still really isn't small companies. There's micro cap. There are sector funds. There are sector rotation funds, where you can have more money in certain sectors, and as the business cycle changes, they'll shift it to where they'll put more money in other sectors. Whatever sector they think is going to be doing better, it kind of shifts around. You don't have access to that. There are investments that let you be in the stock market but have limits to what you can lose. TSP doesn't have that. There are conservative options where you can't lose, but based on how the stock market does, you can get some growth. The G fund is quite limited. You don't really get to participate if the stock market is awesome. In 2020, the stock market was really good, but the G fund was 0.97. It didn't participate. There are other options out there, so one convincing reason to leave may be, I want to look at other investment options because I think there may be better stuff out there. If that's you, that may be a reason you want to leave. Another reason you may want to leave is to diversify your tax strategy. For the majority of the people out there, most of the money is traditional. There may be a little bit of Roth, but the majority of it's traditional, and traditional money has not been taxed yet. It will be taxed when you take a withdrawal. So the good news is you get to postpone the taxes, but at some point you have to pay them. And just like we talked about before, at age 72, they force you to start taking minimum distributions. That'll be taxed. So one day you've got to pay taxes. What do you think the tax rate will be? If the tax rate is better, well then awesome, you're in the right spot. But if the tax rates are worse, then that's not so good. You'd rather pay some taxes along the way at what you deem to be lower rates. Well, the TSP doesn't let you do that. You have to keep traditional. Now, while working, you can contribute to Roth, but you can't reach in and take $100,000 from your traditional and just switch it over. They don't let you do that. That's called Roth conversion. The TSP doesn't allow it. Well, this can be a big deal. And if you really think taxes are going to go up, then you're going to want to be doing some tax planning. The TSP doesn't let you. That, for a lot of people, is a reason that they want to leave. The next reason you may want to leave is to get full financial planning. To work with somebody that can help you on the federal side, understand your benefits, understand your cash flow in retirement. What are you going to be getting, from pension and Social Security and maybe the supplement, and the spouses, maybe they have a supplement. Understanding all these pieces, making sure that your life insurance is correct. Do you have enough? Is your survivor benefit election correct? Are you going to run out of money? Should you pay off your mortgage or not? All of these are questions that most people, they don't want to answer. They don't have the information to answer. If you want full financial planning, most of the time you're going to have to leave the TSP. Another reason people may leave is that they want better service. Now, we've mentioned it several times now, the RMD, the required minimum distribution. At 72, you have to take it from all traditional accounts. TSP, IRAs, any traditional accounts, you have to take it. Well, what if you don't take it? There is a hefty 50% penalty that goes along with it, and you have to pay taxes on top of that as well. So it can be a problem if you don't do it right. If you need a level of service to make sure that you're doing all the things that you're supposed to be doing, you may need to leave the TSP to do that. There can also be a problem with beneficiaries. Let's say you die and they inherit your TSP. If they do the paperwork incorrectly and somehow TSP just sends them a check and they put it in their checking account, well, the whole thing is taxable. There's certain ways you can go about setting up an inherited IRA and receiving the money to make sure you plan for when you want to pay the taxes. But doing some of these things wrong can have a hefty tax penalty that you can't undo once you do them. If you want a higher level of service, you may want to leave the TSP. Another reason you may want to leave is, let's say you're a delegator. You want to enjoy your retirement, you want to do your thing, you just want to delegate and have somebody else handle it. You want to collaborate on the big decisions, but you want to delegate the small ones. I've got better things to do with my retirement time than worry about this stuff. If that's you, that may be a reason you want to leave the TSP. These are just a few reasons why people may want to leave or stay in the TSP. In the comments below, please put your reason. Why do you want to stay? Or why do you want to leave? Put them in the comments below so we can all see everybody's ideas. Until next time, my name is Mel Stubbs. I will talk to you later.